Hello everyone, how's it going? Welcome to today's discussion about Schwab US Dividend ETF trading under the ticker symbol SCHD. SCHD holds a very special and significant appeal amongst the retail investors due to its combination of high yield, low expense, and very wide exposure. It provides indeed a very diversified dividend portfolio in a single investment, making it a preferred choice in the market. In the recent years, the job market has become more uncertain than ever, and inflation has impacted economies that were previously deflationary. Amidst those uncertainties, it becomes essential for us to secure a better financial future for ourselves and by ourselves. And to achieve this, it's crucial to identify stable revenue streams that may distribute dividends and provide a shield against market volatilities. For many investors, SCHD has been considered as one of those opportunities. It goes beyond being just another dividend ETF, and it's often regarded as a safe haven by both retail and institutional investors. Known for delivering stable and growing dividends, SCHD stands out as one of the largest and most diversified dividend ETFs in the market, maintaining its long-standing popularity. In today's video, we will delve into a comprehensive analysis of SCHD to help you determine whether you should buy any share of this ETF yourself. Now, before today's video continues, if you like my content and would like to watch more stock analysis videos like this one, including for SCHD, please remember to subscribe to my channel and to stay updated for the latest. Alright, so with that being said, let's get into it. In terms of price action, in the daily hustle, SCHD hit a recent high of $77.24 and a low of $76.53. For the past 5 days, it's been kinda chill, moving just along 0.5% sideways. Now, if we go to the past month, things are relatively good as well. SCHD has been on an upward trend, gaining about 2% and hitting some resistance levels around the 77 mark. Now, looking back even further, the last 6 months have been pretty bullish for SCHD, as it hit a low of $66.67 in November 2023 and then bounced back. With that being said, here's a quick look at the options. The key regions, or the key strike prices, if you will, are $77 and $78, and an even split between the put and call options. It's like the stock is keeping its options open in all the senses of the term. Options are like a secret language in stock trading. They give you the right, not the obligation, to execute the trade. Checking out the mix of puts and calls in the market, we can have a pretty good idea of what the market is currently thinking. The key being currently, because we have seen time and again people, betting on one side of the tendencies and then only to be collectively proven wrong. So this has definitely happened. We can see this as an interpretation of the current market mood. It doesn't mean that much beyond that point. Now, when we look at the volume, SCHD saw about 3.5 million shares changing hand during the recent trading sessions, a little bit below the usual 3.6 million shares. Volume is like a heartbeat of the trading. It can tell us how many actions is going in and out. The more volume may mean more interest and more momentum, but also the more volume it's been usually traded, it will also mean how stable the price can be. In other words, if there are like hundreds of millions of shares traded on a daily basis for a stock, it's likely that this stock price will not just jump up and down. It's going to go very smoothly in one way or the other, which seems to be the case for SCHD, all things considered. So, the Schwab's SCHD is a dividend exchange traded fund ETF that has gained a lot of popularity amongst investors seeking reliable income streams. It was launched by Charles Schwab, and this ETF offers a very convenient way for investors to access a very diversified portfolio of companies with robust cash flows and also like cash available for dividend distribution. A dividend ETF like SCHD essentially brings together a collection of companies known for their like very strong dividend paying histories. And by investing in SCHD, individuals can effectively acquire shares in hundreds of companies in a single transaction, providing a simplified approach to build a diversified investment portfolio. Instead of looking for hundreds of individual stocks, analyzing the financial reports and ratios of each and every one of them, SCHD will scan through the market for companies meeting specific criteria in terms of profitability, cash flow management, and pricing, offering investors a much easier solution to have a balanced portfolio. One of the key advantages of SCHD lies in its ability to offer a good yield to investors. The fund's emphasis on companies with consistent and growing dividends contribute to a reliable income source for those seeking regular returns. Additionally, this ETF's broad exposure to various sectors also ensures a very diversified investment, reducing the risk associated to each individual stocks. This approach is particularly healthy in the long run because although we may have like an idea of which section is popular at the moment, in the long run things tend to even out. And if stocks were manually bought, it's possible that those sectors will leave us to hold the bags when the tide folds back. So by removing our subjective and short-term perceptions, the investments will have a much more smooth progress going forward. So the safety in numbers approach is, of course, another very obvious advantage in SCHD's portfolio, including a substantial number of stocks. This diversity acts as a protective measure, helping to mitigate the impact of poor performance from any single company in particular. Investors benefit from the resilience provided by a basket of stocks, making SCHD an attractive option for those prioritizing stability in their investments. Comparing SCHD to the S&P 500 also reveals some interesting insights. Like both include many of the same companies, SCHD's focus is more on the dividend-paying stocks, makes it a relatively safer option of the two. This emphasis on income generation provides a unique angle compared to the broader market, potentially appealing to investors seeking a balance between growth and stability. And when we think about it, most of the companies included in SCHD are large caps based in US, many of which are also listed on the S&P 500. So to an extent, we can say that SCHD is a relatively safer and more traditional side of the S&P 500, since some of the biggest companies in the world do not pay dividends to begin with. The price action of SCHD can also be justified by considering the increased capital allocation to equities over the past 15 years. As more investors recognize the importance of dividend-paying stocks in their portfolios, the demand for ETFs like SCHD has definitely increased over time. The fund's performance is also influenced by the individual success of companies within this portfolio, further emphasizing the connection between the movement and the underlying assets. In other words, the price increase of SCHD does show an overall decrease of capital yield over the past decade or so, mostly due to the quantitative easings that have been overseen by central banks around the world. Investors with specific goals find SCHD particularly beneficial. For instance, those prioritizing a stable and increasing dividend yield will find SCHD aligned with their objectives. The emphasis on companies with strong cash flows and consistent dividend payments caters to income-focused individuals and investors, providing them with a very reliable income stream. For many, the SCHD serves as a very stabilizing force in investment portfolios. Its diversified nature, coupled with the safety in numbers approach, helps smoothing out the volatility. For investors looking to balance risk and return, SCHD offers a very compelling solution, acting as a counterweight to more volatile assets in the portfolios. The famous dividend ETF really stands out, as this one brings simplicity and diversification to investors. With its focus on companies with good cash flows and a history of reliable dividends, SCHD really offers a very compelling option for those seeking stability and income in their investment portfolios. The fund's performance over the past 15 years, coupled with the advantages compared to the S&P 500, positions it as a very valuable tool for investors with specific. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So, having said all that, SCHD looks like a good bet, but it's cruising very close to its historical high in a bit of a shaky market. My advice is to take it slow. Ease into your position and maybe hold off for a clearer picture before going all in. Options and volume insights can help guide your moves in this unpredictable market dance. Now, I would recommend to commit between 10 to 15% of your portfolio's capital in SCHD.